Prateek Agrawal, MD and CEO with us of Motilal Oswal AMC. Prateek, very good morning to you. And
good morning.
Hope you're doing well. How are you looking at the outcome of the details of the trade deal and the shift in mood of the markets? Is that palpable when you look at the kind of opportunities that now lie at current valuations?
Yeah, short answer, yes. For a long while, if there was one excuse that people had, into not looking at India and looking at other markets, the whole world is doing very well in terms of stock market performance. We are the worst performing markets of any size. It was basically that, we don't have a deal with the US and our currency is weakening. Now, in some manner, both were feeding into each other. Now we have a deal with the US and the currency is stable and hopefully should be stable. So then the reason to not look at us goes away. On top of it, relative valuations have changed considerably. And, well, we are no longer the most expensive market in a long period. EM premiums that we commanded are now within range. And this is a country which offers scale like no other country. So lots going for us. Quarter 2 numbers were good. Quarter 3 is an encore, and now analysts are saying FY27 over a lower base of FY26 could also look strong. So, for somebody who is taking a pause and looking at India again now, I think there is a lot working here. Our simple thought is versus a torrent of outflows that we saw last year. This year, maybe if the quantum of outflows itself reduce, markets will get a breathing space.
Okay, so at least if the outflows reduce, we get a breathing space. Where is the room to grow then, in your view? I mean, traditionally you would think your typical private banks, spaces, your large caps where FIIs usually have more interest is where you see buoyancy. But do you see that upside more wider this time round on the back of what we've seen in Q3 so far?
Why does the foreigner come to India? It is for growth, right? So when you say private banks or IT services, they led growth in this country for a very long time. When you say they will again come back into those spaces, then you are assuming that these spaces continue to be the growth drivers. To my mind, they are not. Okay, so yes, these spaces are great parking spaces. These are large, liquid, 50% of the index. So, if you put money into India, these are spaces where you will first put money and then over time, it shall get dissipated to where, get invested into where you want it to be. Okay, now look at it this way. In 24, there were global themes like EV, like defense, like new tech, etc. Similar stuff worked in this country. In 25, the global growth themes continued, right? But what worked in this country was very different. And the whole reason is that FPIs who got the global themes into this country, chose to sell rather than buy. I think if the selling pressure reduces, once again, the manifestation of global themes into this country would also increase. The last year was a strange year. Index showed just about 7-8% earnings growth and performed similarly. The broader market did much better and yet showed a large crack. And there is where the opportunity opens up. Newer themes, global themes with large valuation correction is a very nice combo to look at just now if you are, taking a pause and looking at the markets with a fresh pair of glasses.
Prateek, good morning, Neeraj here. Not too much in the budget, but for specific themes, but one or two stood out. And there's this whole impetus on data centers, which seems to be the front and center in terms of sectoral allocations and advantages. Is that a large theme developing in India to play this? In sense, does it have the ammo to become a sector into itself? And are the investing opportunities lucrative enough within the existing listed pockets, or are they all priced in, you reckon?
No, so two US hyperscalers have committed large amount of money to data centers in this country. Many more may do so. I think the regulations themselves want Indian data to stay in India, and the whole attempt is if regional data can somehow be housed here rather than be taken to some other country and be gotten back. Very long tax benefit has been provided. Now there is a whole ecosystem of people who put up data center, the builder who does it and rents out, the AC guys who may provide air conditioning, the electrical guys who may do the other bit of plumbing, etc. And then, of course, there are power suppliers. Now, one has to, it's my thought that mostly these data centers will have to depend on renewable to be seen as not damaging the climate, be climate friendly. And when you do this, it feeds into two other themes, which is renewables and BESS, battery storage, or maybe pump storage, whatever it is. So I think in terms of investing, if a global guy comes and sets up a facility in this country, my sense is they want their ecosystem to come in as well. So if they have a data center somewhere in the US and 10 companies have supplied the plumbing to it, they would want the same to come here and do that as well, rather than go locally and try and source plumbing, which means a lot of the business could go to MNC kind of players versus domestic players. Is a thought, whether it is true, false, time will tell. I think the best is to look at power producers, renewables.
Okay.
As a part of the total, it is small, but it can grow.
Prateek, actually coming on that, therefore, the valuations of some of the renewable energy companies, if they manage to do what they have guided to do last year as well, for the next 2, 3, 4 years, have become very attractive post the corrective moves. Where within the renewable space is the best bang for the buck? Is it the solar players? Is it the wind players? Is it the equipment players? Is it the module manufacturers? It's a very wide bucket. What do you like?
No, so I think a lot of players will have a long runway of growth. Here, our thought is to be with the top one, top two player only, because especially in solar, where a lot of capacity is there, we do believe there will be humongous amount of consolidation, and we also believe that many may not even be consolidated. There is no use of that capacity. And very soon, as you start to think that these guys will survive versus somebody who doesn't, then a solar module, to my mind, has a producer warranty of 25, 26 years. Now, you don't want to buy a module from somebody who you suspect won't be there after 5, 10 years. So very soon you will see a dichotomy in the market, few players that market thinks that actually IPP and the bias thing will survive for longer, will command very different numbers versus people where there is a suspicion. So that one thought has to be there. So my whole thought is to be with the top guys in this space, not go much below. And this is something you will find in the marketplace. Look at the valuations of who is listed versus the guy who is coming up fresh. It will all be several notches lower. So that is the thought, but otherwise very, very long runway of growth. If the world is looking away from, let's say, China, we are the other country which makes it, the modules, the cells, the ingots, etc. And our guys could find more export markets. Now, wind, the problem is different. It is the problem of how many sites we have. Okay, so the scalability of wind is not as much as solar, but competition in wind is also lower. If somebody is able to find an export opportunity, I think market will take a much better cognizance of the same and would be food for re-rating.
Interesting. Okay, I'm sure the managements would be meeting experts, and maybe some of them would advise them to try and think of that as well. Prateek, such a pleasure talking to you as always. Afraid we are out of time on the show completely, but thank you so much for being with us today.
Always.